When most people start trading with $100, their focus immediately shifts into a get-rich-quick mindset. They start thinking they can get rich in just a few days, double their account overnight, turn one winning trade into financial freedom, maybe even become a millionaire, and start dreaming about quitting their job. So, what happens next? They begin treating trading like a lottery ticket. Not, how do I grow this slowly, but how do I escape this amount as fast as possible? They start chasing every move to avoid missing profits. And that's where the problem begins. Because emotional shifts change how money is perceived. Turning $100 into $1 million is not about speed. It is about thinking in years, not days. This is the power of compounding mindset. A compounding mindset sees $100 as a seed. You plant it, you protect it, something that must survive first before it can grow. Imagine planting a tree. If you constantly dig it up, move it, check the roots every 2 days, and pouring too much water to see how fast it's growing, you destroy growth through impatience. That is exactly what overtrading does. Overtrading is usually not caused by opportunity, it is caused by emotional discomfort. The first goal of trading is not making money. The real goal is consistent long enough for growth to compound. It is about restraint under temptation. It's watching a small account and feeling the urge to take one big trade, the urge to recover faster, the urge to prove something quickly, and still choosing, not now, not with this risk. Choosing long-term survival over short-term excitement. Most people hear 5% per week and think, that's too small. But experienced traders hear something completely different. If I can do that consistently without blowing up, my future changes. However, most traders struggle to think this way because the temptation to speed up the process is always there. The urge to make more, the urge to recover faster. That's why most trading accounts fail early. They stop thinking in years and start thinking in days. Instead of asking, how much can I make today? Experienced traders ask, how long can I stay consistent? That is a completely different mentality. The goal is no longer to get rich fast. It is to stay in the game long enough for compounding to work. The principle is simple. Stop seeing $100 as small money. You start seeing possibility. If you can consistently grow your account by only 5%, every week the numbers become surprisingly powerful over time. At 5%, weekly growth, $100 becomes about $10,000 in less than 5 years. You can keep this mindset until millions. It comes down to one thing: consistent growth repeated over time can produce results that seem impossible in the beginning. That is why experienced traders measure success differently. They don't judge themselves by one trade or one day. They judge themselves by a series of disciplined actions repeated over months and years. But maintaining that discipline is not easy because every trading decision is influenced by something deeper, your emotional state. Most traders focus on finding better entries, but the real problem often starts much earlier. It starts with their emotional state, because it influences the way we think, and the way we think shapes the decisions we make. Trading is not just about charts or strategy, it is about your mental state when making decisions. Fear, greed, frustration, and impatience all affect how clearly you think, and how clearly you think affects every trade you take. Imagine a trader enters a trade according to plan. The entry is valid, the stop loss is in place, everything looks good. Then the market pulls back slightly. A disciplined trader thinks, this is still within my plan. But an emotional trader starts feeling discomfort. At that moment, the trader is no longer focused on the setup. Decision is no longer based on probability. The focus becomes escaping emotional pain. So they exit early. And what usually happens next is painful. The market resumes in the original direction, but they are no longer in the trade. This is how discipline slowly breaks down. Not through one big mistake, but through small emotional decisions repeated over time. Technical skill alone is not enough. A trader can understand the market perfectly and still fail emotionally. Greed is even more dangerous because it feels like confidence. After a few winning trades, the trader starts thinking, I can make more. I should increase my lot size. This market is easy. Slowly, confidence becomes overconfidence. Position sizes become larger. Risk management becomes weaker. Then, one normal losing trade appears. Suddenly, multiple previous gains disappear. What makes this worse is trader does not recognize the real cause. They blames the market, they blame the strategy, In the next video, we'll talk about this. Not all trading pressure comes from the market. So what external forces are actually influencing your decisions, and how do you handle them?